Good afternoon. I'd like to call the hardest working committee in the state legislature to order, please. House Ways and Means Committee for January 9th, 2024. Mr. Clerk, would you please call the roll?
Representatives Barrett, Boyd, Camper, Cochran, Crawford, Faison, Freeman, Gant,
Here.
Garrett, Hawk, Hicks of Hawkins, Kiesling, Lamberth, Love, Lynn, McKenzie, Miller, Moon, Parkinson, Shaw, Sparks, Whitson, Williams, Zachary, Vice Chairman Baum, Chair Lady Hazelwood. Madam Chair Lady, you have a quorum.
Thank you, Mr. Clerk, and good afternoon. I'd like to welcome those in the audience, both online and physically present, to the first meeting of the Finance, Ways and Means Committee for the second year of the 113th General Assembly. Before we get started with our budget hearings, which are the purpose of our meeting today, do we have any personal orders? Leader Lamberth, you're recognized.
Madam Chairman, as one of the members of the hardest working committee in the legislature, we truly appreciate your leadership, and we're glad to see you swinging the gavel again this year. Welcome back.
Thank you so much. I'll remember that when you all start complaining. We've got several hearings that were scheduled this afternoon. Some are agency hearings, some are updates from some of our larger departments, and we're going to be beginning with the Division of TennCare. As you all know, TennCare is in the midst and sort of winding down on the redetermination process for eligibility. So I would ask the director and his staff to come forward. And members, there is on your dashboard, there are some slides that the director will be going through, and those are available on your dashboard, as will all the presentation documents for today. So without further ado, Director Smith, thank you for being with us this afternoon. We look forward to getting your update and so that we can know where we are and where our constituents might be in terms of this whole redetermination process. So if you'd like to begin.
Thank you very much, Madam Chairman and members. It's good to be with you all this afternoon. My name is Stephen Smith. I serve as the TennCare Director. To my right is Zane Seals, our Chief Financial Officer, and to my left is Kim Hagan, our Director of Member Services. As you mentioned, Chairman, we are here today to provide an update on the TennCare renewal process. This is a substantial undertaking that is occurring all across the country with every Medicaid program in the nation. It's one that has received quite a bit of attention. And the timing is good here because we are able to share final data for the first 6 months of this process. As I expressed last year around the same time to this committee, Tennessee was and is very well positioned to go through this process, both from a program standpoint and from a systems standpoint. And we are in a good place financially due to some very sound decision-making by the administration and by the General Assembly, and we are very appreciative of that partnership. We've been asked to keep this pretty brief, so I'm going to go through this very quickly, and then we'll, of course, have a lot of time for all the questions that you all have. Some quick background on redetermination itself. Redetermination or renewal it's not new to us. It's not new to Medicaid programs throughout the country. It's required by both federal and state law, and it's a process that confirms eligibility for Medicaid benefits, or in our case, TennCare benefits. It's a process that, absent extreme circumstances, is required every year, and we are prohibited from maintaining enrollment for any individual that does not verify eligibility. As we all are well aware, we had one of those extreme circumstances occur. In 2020, the federal government declared a public health emergency due to the COVID-19 pandemic, and that declaration was coupled with a continuous enrollment provision for Medicaid programs, and that meant that what that meant was this annual redetermination process was suspended, and therefore removal of members from the TennCare rolls was prohibited, and that took place until Congress acted and set April 1st of 2023 as the end of the continuous enrollment period. Here you can see a graph that represents the impact of that continuous enrollment requirement, and as you can see, it's pretty substantial. Our enrollment peaked in the middle of 2023, represented about a 26% increase, more than 350,000 members. So that means we have more than 1.7 million members that are going through this renewal process for the first time in 3 years, and we have some TennCare members that are going through this process for the first time since they've joined the TennCare program. So again, it's a pretty substantial undertaking for both us and for the members that we serve. As I mentioned earlier, we have been preparing for renewals for quite some time, not knowing when the continuous enrollment provision was going to end. We knew it would end at some point, and so we've been preparing for quite a long time. That preparation focused on having a modern, user-friendly online eligibility system, extensive communication with our TennCare members, our providers, our stakeholders, and then maximizing our ability to automatically renew individuals through other available and reliable data sources. I can say this without hesitation, it has never been easier for a TennCare member to renew coverage if that coverage is desired. And Tennessee is as well positioned as any state in the country in terms of our processes and our readiness. And this has been confirmed by the fact that we are among only a handful of states that has not been required to submit a mitigation plan by the federal government, and we are in a minority of states that has not been forced to pause renewals at any point during the process. Here you will see a snapshot of our most up-to-date renewal information, and you will also see a comparison of our numbers to the national average. This is probably the slide that many of you will be most interested in. To date, we have renewed over 60% of the members that have gone through this process. That compares to 50% nationally. One thing to note here is that we have renewed 42% of the individuals that have gone through the process automatically, meaning that they haven't had to do anything in order to be renewed. We're able to use other data sources to verify that eligibility. And that compares to 30% nationally. In terms of the percentage that have been deemed ineligible, we are at 31%. That compares to 27% nationally. But I would point to that pending category, and you can see that nationwide, there's a much larger percentage of individuals that are pending than here in Tennessee. That's due to the fact, again, that many states have had to pause that process due to the federal government intervention. But what that indicates, though, is that the percentage of people that will be ineligible nationwide, that is going to increase. The other thing that I would point out here is of the procedural terminations, so these would be the ineligible individuals who have been deemed ineligible because they did not return required information. That was known as procedural terminations. 43% of the individuals that have been deemed ineligible for this reason have some other form of health insurance. So that may be a good reason why someone may choose not to respond. I want to circle back to our enrollment slide and give you our best up-to-date projections of where we think we will be when this process is complete. We said at the onset of this that our best projection was that when all of this is said and done, we think we'll be back to where we were at pre-pandemic, and nothing has occurred that would lead us to believe that that projection is still not the best projection. But again, in full transparency, we don't know. We have to get through the process. We have to complete the process to really know where we will be. As we have talked about many times with this committee, during the public health emergency and the continuous enrollment requirement, we have been receiving an enhanced federal match to address the increased cost of membership. And then per action of Congress in late 2022, that enhanced match was completely phased out over the course of 2023. So we are no longer receiving that enhanced match. But the good news is we have sufficient funds in our reserve to cover the cost of the temporary enrollment increase. And so again, we're very well positioned to see this process through. That completes my prepared remarks, Chairman. Happy to answer any questions you all have. And there's a lot of information in the appendix in the slide deck, and we're happy to answer any questions you all have.
Thank you, Director. this is important to a lot of Tennesseans, and that makes it important to those of us who represent them. So thank you for helping us understand where we are in the process and what we might be looking towards in terms of, as we wind it down. But I think toward April, process should be complete. Will be.
Our last, thank you. Our last cohort will be March of this month, but then it takes an additional 2 months because of appeals and all of that. So we'll be looking at our first final set of data in May of 24 of this year.
And hopefully we will not be in session at that point, but that'll be a question to be determined later. Yeah. But I do have a number of folks on the list with questions, beginning with Vice Chairman Bond.
Thank you, Madam Chair, and thank you, Director Smith, for being here. You mentioned that a number of our TennCare recipients have been automatically re-enrolled. I think your slide said 42%. The remainder of them have to take some kind of action to re-enroll. They could go online to TennCare Connect. They could call in. They could go to a kiosk. I suppose there are other options like mailing in the packet. Do you have any breakdown of which ones of those methods are used the most by people who have to initiate some kind of action to re-enroll?
Yeah, I'm going to ask Kim to respond to that. And I should say that Kim is in this day-to-day. She really is doing all of the day-to-day work, and I want to commend her and her team for all the efforts, because I really feel like Tennessee, we're leading the nation in this process, and I feel really good about where we are.
Can you hear me now? Okay. Kim Hagan, Director of Member Services. Thanks for the question. The primary or the largest modality of responses are coming in via phone. People can call in and complete the renewal questions via phone. If we then run our system against data sources to see if we can verify, let's say they give us a new income on that phone renewal, we'll try to verify electronically what they've told us. If not, we then ask for verification, and those verifications can be sent in, the ways that you said. They can be uploaded online, they can be mailed, they can be faxed, they can be taken to any DHS office and scanned in, or we have an app where they can actually take a picture of the verification and it comes into us.
Okay, thank you. And sort of related to that, if a household needs to initiate the renewal, then you mail them a packet through the postal mail. But I guess one of the concerns a lot of advocates have had is that these addresses may not be accurate. And so I guess my question is, how many of those packets that you have mailed out, what % of them, have been returned to your office as undeliverable?
Let me take this one. Okay, sure. Couple of things here. So number one, if somebody has a TennCare Connect online account, we also send an email at the time that we mail it, and they can choose how to receive their mail, if they want it via U.S. Postal Service or through email or both, including text. And so if we mail them a renewal packet, we are also doing nudging along the way. At the time the packet is mailed, I think we do about 14 nudges per renewal family. At the time it's mailed, when we ask for verifications, when it's coming up due, even up to 90 days after they term for no response, we're still nudging. And our nudges are going out via email, text, phone calls. Our managed care partners are also nudging throughout that period. And then if we do receive returned mail, we have a couple of processes in place, such as if we receive returned mail and there's a new address, we will essentially restart the entire process for that family, send them, kind of restart from the beginning for them. That's some guidance that CMS, our federal partners, had released once we got started with the unwinding. There's also the 90-day reconsideration period. So if someone terms for failure to engage in the process at all, and they come back in within 90 days after that term date, and they are deemed to still meet the eligibility requirements, we'll fill in any gap in coverage so that, if they had bills during that time period, then we'll cover those bills. But to answer your other question, the return to mail rate has varied from about 7% to the 10% range. But we're doing all of these other processes to help with that. And before we got started, we did many things such as, we did outreach campaigns. We mailed a notice to our entire population to sort of test the undeliverable mail so that we could go ahead and process that. We updated about 80,000 addresses through that process. We have, made it super easy to update your address, which every member is required to do by state and federal law. You can update it using an app. You can call. There are various ways to update their address, and so we have continued to run campaigns encouraging people to keep their data updated with TennCare.
Okay, thank you for that information. And one more question, Madam Chair. I've heard that in some states there has been maybe one member of a household that's been automatically renewed, maybe it's a child, but then there have been other members of the household that needed to initiate the renewal. They didn't do what they needed to do to renew. Maybe they didn't mail the packet back in. Maybe they didn't even get the packet in the mail. And these states have, in turn, said the whole household is ineligible or they don't receive continued coverage because one member in the household that needed to initiate didn't do it. I guess you've said that Tennessee hasn't been asked to pause, and so that hasn't happened in Tennessee. How do you handle that when one member of a household is automatically re-enrolled, but another member of the household doesn't initiate re-enrollment?
Well, I'm very happy to say we were not one of those states that was included among those that are in that category that you mentioned. And you're right, those states did have to pause and fix that issue. And that was a pretty significant financial impact for those states. We did not experience that here, so we're very thankful for that. But do you want to speak to the?
Yeah, we do run our ex parte process at the individual level. So if it's family of 5, we'll look at them each individually to see if we can auto approve them before sending out a renewal packet.
Okay, thank you all.
Chairman Williams.
Thank you, Director, and your team for being here. I had a couple of questions. You talked about nudges previously as it relates to what you're doing to help people get re-enrolled. I guess I understand, too, that MCOs are doing that. I just wondered, from a MCO perspective, what are they doing that's similar to what you're doing as far as nudging? Is there any collaboration between you and the MCOs as to who they've contacted and who they haven't? I just didn't know if, do they notify you when they've made contact and you haven't, or vice versa?
You want to talk about the waiver provision that we get to use their addresses? Go ahead.
Yeah, sure. So I guess to specifically answer your question, we share lists with our MCOs, for each monthly cohort of people going through renewal. And we are sort of throwing the kitchen sink at these members. So even though we may be texting, emailing, calling, they're doing the same thing. So they're texting, they're emailing, they're calling. They are, for some populations, they're providing lists to providers, to mental health providers, to, for our long-term care population, they're providing lists to nursing homes so that those providers can also help people through the process. We also, CMS offered various waivers that states could use during the renewal process, during this unwinding process. And we have taken advantage of every one of them that makes sense for Tennessee. In fact, I think we and one other state have taken advantage of the most waivers in the nation. And so a couple of these waivers include, using MCO reported addresses if they're different from ours, and then allowing MCOs to help people through this process, because MCOs in the past haven't really gotten involved in eligibility. But during this unwinding process, they're allowed to help people through.
Chair Williams.
So, two things. One, first, I appreciate your staff, Ms. Reed. She was very helpful sometimes as it relates to getting people re-enrolled. Sometimes people's health wouldn't allow them to. And so I had an instance in my community where someone was not able to renew because they were in a healthcare facility in my district. And so your department was really good about doing that. I think it's important for us to know that we're doing things sometimes out of the ordinary, more than just a nudge. And so wanted to thank y'all for that. I know it's this was someone with no family. And so without our help and your team's help, then they wouldn't have been able to get the care that they need. So I appreciate you guys doing that. That being said, Tennessee Rural Health Association also is a pretty good partner with you guys as it relates to re-enrollment process. I was hoping maybe you could better describe to me how that works through Tennessee Rural Health.
Yeah, go ahead.
Okay. Sure. We contracted with the Rural Health Association right when we got started to provide extra assistance to individuals going through renewal. So it's a grant, competitively bid, and they won. And so we provide lists to them. Primarily, they are outreaching to people who don't have an MCO assignment, so that's mostly our older individuals who have Medicare and are on a Medicare savings program. But they are taking those lists each month and performing outreach. They're getting very good responses. People who are saying, "Hey, you're the third person who's reached out to me." You know, they're getting very appreciative individuals, but they also are having to look a long time to find somebody who actually needs help. And then they are also present in rural health clinics, helping people, and then they do outreach events across the state.
Right. Well, I appreciate that answer. I do think when you look at this population, a lot of times in spite of the legislature's best efforts to try to give everybody rural broadband and give them connectivity, this is more of a touch than it is anything. And so I think it works well, particularly in our rural communities, to make sure that people have access to somebody in case they don't have internet access or the ability to have an app. So thank you.
Leader Cochran.
Thank you, Chair Lady. Appreciate your presentation this morning. Just one quick question. So slide 13, it talks about that in most cases, members that have been selected for review. So tell me, so why would a member be selected for review outside of when that naturally occurs? Tell me, I know most of the time you do it when it naturally occurs. Tell us about when that would happen outside of that natural date.
Sure. So we started moving these renewal dates out back in March of 2020, right, when the public health emergency went into place. And we tried to move them out about a year, so that their renewal months continued to be the same. Once it was time for us to start this unwinding period, we looked out across the year of unwinding and decided to do unwinding in sort of a bell curve, so that we started a little lower, got high in the middle, and then ended a little lower. And so we did move people around through that process. We also made sure, like our long-term care population, that they were evenly spread out across the 12 months, so that we weren't doing too many of them in one month. And then there are other natural reasons, like somebody could have reported a change, and then they're reapproved. Well, when that happens, we push them out a year. We could have a family unit could come together. Maybe they had two cases and now they have one. Well, we would have moved some of those members' renewal date to ensure that the whole family had the same renewal date. So various reasons. Pregnancy also will impact renewal dates.
Thank you.
Next on my list, Chairman Hawk.
Thank you, Madam Chair. Director Smith and your team, thank you very much. I know it's been a arduous task that we've been preparing for a long time, and I appreciate the work that you've done. I want to talk a little bit about the dollars and cents of what we're discussing. And to that point, you mentioned some contracts and some grants with partner organizations and MCOs and folks like that. But how labor intensive has this been for the state? Have we had to bring on new resources, and what's the long-term outlook for those individuals? And if you can address that to a degree, please.
Sure, I can start. It has been labor intensive. We certainly have had to increase the capacity of our staff to complete these renewals when you have 1.7 million members going through this process. We received approval in our budget to hire some temporary staff, and so fortunately you all approved that, and we have had to increase that staff, but that won't be a permanent thing. That'll be something that once we get through the process, we'll make those adjustments. But I think that would, Zane, anything else you'd want to add? I think from a TennCare standpoint, that's been it's been a labor intensive issue. Yeah.
Yeah, we've hired temps through a variety of different contracts. There's a kind of a standard statewide contract for general temps.
For the record, please identify yourself.
Zane Sills, Chief Financial Officer. So we've hired temps through a variety of different contractual mechanisms. There is the state's kind of standard statewide contract for just general temps. We've made use of that. There's also been a need for more specialized temps. For instance, some lawyers for some legal expertise, because there's a lot of legal issues that go on with the eligibility redetermination process. So we've invested in a particular contract that we already had in place for contracted legal services. So there's a few different places that we've touched there. Those are all non-recurring dollars. We haven't had to get a recurring appropriation for that. We've been able to use the EFMAP dollars to pay for that. And that really is a very small portion of the overall cost to the state comparatively to just the cost of services for these additional enrollees while they're on the program.
To just kind of follow up on that, for those of our citizens who are calling in, I have had some complaints about wait times and that sort of thing, and getting through, to talk to someone about re-enrollment. So do you have average wait times? Is that fluctuated, or is there a better time of day or week to call? How does that work?
It has fluctuated. We have had to increase our capacity at the call centers. Just to maybe give a little bit of context, the public data that's out there that does a comparison of all the states, this would be October. Our wait time, average wait time, is about 19 minutes. Nationally, it's about 17 minutes. So that kind of tells you where we are. We're always trying to improve that. One option that we do have is there's a callback feature where someone can input their number and get a call back, so they don't have to wait on the line. But it is something that we're paying close attention to, and we have seen an uptick, as every state has seen. We've seen an increase in the wait times.
And I think we all know that every minute that you're waiting on the phone seems like 10. So
Yeah.
That's an issue as well. One of the things that...
Sorry, I'll just add, Monday morning is a terrible time to call.
As it is most places.
Yeah. Fridays.
One of the things that I know some of my colleagues and I are really concerned about when we looked at some of this data, there were over 80,000 people enrolled in TennCare in April that were over 65. And based on the report that was updated December 14th, it indicates that 25,000 of those people have been found to be ineligible. So trying to understand, that's a significant portion of that base. and trying to understand what were the reasons for those people to be found ineligible and no longer be on the rolls. You know, you think the people over 65, their financial situation is not going to have that much variability. So what's causing that, and are there mitigating factors that we need to be concerned about? Are these people being declared ineligible for what reasons?
Yeah. Yeah, thanks for the question. There could be a couple of reasons. One reason could be that you have some in the elderly population that would have been in the caretaker relative category. Maybe they were the guardian or the caretaker of a grandchild or another individual, and that child may have aged out, meaning that they would no longer be eligible. We also know that during the public health emergency, you had a lot of people in that age group that left the workforce, and now they have returned to the workforce, and so that could impact income eligibility. That can impact income, and therefore they may not be eligible. We did look at comparisons with the rest of the country, and unfortunately, there are only about 23 states that are reporting by age group. We're one of those. So we have 23 states that have reported. They've broken it down by children and adults. The elderly would be included in that percentage of adults. If you look at the total number of people that have been deemed ineligible, the adult portion of that for us is 73% of the total. Nationally, it's about 63%. We're lower on the child side, so we're 27% versus 37% children. We're a little bit higher on adults, but we don't have apples to apples comparisons on just the elderly population. We're trying to see if we can get that, to see if we're an outlier. There's nothing that we have seen to date that would show us as an outlier, but we are digging into that, see if we can see if that is the case.
Well, I think one of the concerns, Chairman Williams had mentioned a situation that you all were helpful with, and I think my concern would be how many of those other situations might there be out there with people who are, they're over 65, they maybe aren't, mentally capable of just going through the process on their own, and they may not have family or somebody who's helping them. So, what all of us want to avoid is having a group of people that are suddenly ineligible, and they probably don't even know they're ineligible until something bad happens. So, any other information you can get about that, and anything that can be done to make sure that, I know all of the nudges that you talked about, a lot of those are electronic, and that is the age population that probably is not going to be responding in that way. Again, people in nursing homes, people in home care kind of situations. So that just remains an area of concern for us, I think. With that, Leader Lamberth, you're next.
Thank you, Madam Chairman. So last year when we were beginning this process, full disclosure, I was very concerned that this redetermination process would not go well. So we talked about it extensively in this committee. I'm proud to say you all have done a phenomenal job. I mean, I have received very few phone calls from my constituents. I know it has been difficult, but your staff, the folks you brought in, I just wanted to commend you, at least from what I have heard, it has gone very well. Obviously, there have been folks that have had difficulties within that process, but I noticed on the previous graph, and I'm going to get to a question in a moment, that we had gone from about 1.4 million Tennesseans on TennCare. That has crept up over the years, but it had stayed relatively static, and then it kind of spiked up to above 1.6, and now it seems to have come back down to where it truly is those that are eligible for TennCare. So I don't think we saw a massive reduction back below kind of a normal level, that graph there. So it looks to me like you all have done a very good job of this, and I know we'll continue to watch it. One of the things we asked about last year is TennCare had roughly $1 billion in reserves. My understanding was about $500 million of that was going to be utilized for this process, both not necessarily for the administrative aspects of it, but for carryover services to make sure that there's no one falling through the cracks. Roughly $500 million of that I'm assuming has been utilized to this date. So my question is, how much was utilized on the redetermination process itself versus providing coverage for enrollees during determination? And what, if anything, is left out of those reserves?
Thanks for the question. So let me clarify. So actually, if we look at the remaining costs, so from fiscal year 24 and fiscal year 25, because this graph actually shows the projection, and you can see we don't really get back to what we believe is going to be the normal until that is May of 25. So when we project the cost associated with that, we actually that's where the $500 million comes in. So we've got that's about what we have in our reserve right now to address those remaining costs. I don't know if that answers your question.
Thank you, Madam Chairman. Not yet, but I think you're getting there. So we had estimated last year when we were in this meeting about $500 million to handle that cost throughout the redetermination process. Are you now saying that you anticipate it's going to cost another $500 million? I guess where I want to know is how much have we spent of that $500 million of the people's money as to date, and then what do you anticipate will still be spent?
Correct me if I'm wrong, but we haven't, when we were talking about that particular $500 million, that was in the context of the FY24 and FY25 budgets. And so I guess we're in 24, so we've spent some of that, but well, why not just turn it over to the money guy so he can speak to it more directly.
Thank you, Zane Seals, Chief Financial Officer. So to clarify, that $500 million was set aside in the reserve and intended to pay for the costs after the EF map expired. So the EF map phased down essentially all the way through calendar year 23. It just phased out a few days ago at the end of calendar year 23. So as of now, we are officially no longer receiving any enhanced federal matching dollars. So, and we're not anticipating getting back to our normal baseline until sometime in the first half of calendar year 25. So it was important that we set that money aside so that we'd actually have money to pay out the enhanced enrollment essentially from now until that period where we hit the baseline. So that's what that $500 million was, approximately $500 million. Through fiscal year 23, we were using the enhanced EF MAP dollars as we were getting them to pay for those additional enrollees. Through that period, from the beginning of the pandemic through the end of fiscal year 23, we spent about $909 million state. That's just the state portion. So it was a very significant cost. But fortunately, we were able to utilize those enhanced matching dollars and not have to ask for any recurring budget authority to cover that.
Leader Lambert.
Chairman, I'm sorry. So we're still not to the answer to my question. I apologize, but we're going to go at this again. So it sounds like the answer I'm hearing is none of the $500 million that we set aside has been spent, and there is still an additional $500 million in your reserves. Is that the answer?
That's right.
That's right.
That's right.
Perfect. Thank you.
Chairman Zachary.
Thank you, Madam Chair. Director team, thank you. Just a quick few questions about TennCare Connect. How long has that been operational, and how many people have enrolled in TennCare Connect?
So we use TennCare Connect for several things. We call our call center TennCare Connect. We call our online portal TennCare Connect, and then our app is also called TennCare Connect. And so the online portion, which I think is probably what you're talking about, went live when TEDS went live with our pilot back in October of 2018. We opened it to just a few counties, and then by spring of 2019, we opened it statewide. So it has been in use since 2019. We only with our unwinding prep have done major campaigns trying to get people to sign up and adopt it. We have about 800,000 accounts, TennCare Connect accounts in use.
Madam Chair, just a couple more. Do you know how many enrolled prior to the verification re-enrollment? What would you know with that number? That 800,000. I mean, was there a significant increase associated with that?
There was a significant increase, but I don't have those numbers. I'm happy to pull it for you
Yeah,
and
if you
get
don't
it
care.
to you.
And then one more, Madam Chair, if I may. So has that process, have we seen any, of course, there have been efficiencies that have been brought because of that, but what about in terms of, is there any way to justify any kind of cost savings or something that's tangible related to that regarding the enrollment of people within that program?
So, I mean, there's certainly the opportunity for someone to go in to their TennCare Connect account, complete the renewal flow. It's all presented to them. All the data we have on you is presented to you, on the screens, and get essentially a no-touch decision, meaning the system makes the decision whether you are approved, denied, or we need further verifications from you. So there is, that no-touch decision means that a human doesn't have to do that work.
And I guess that's my question. I mean, obviously, we know the efficiency brought by that, but have you been able to calculate or even look at that over the last 4 years, this has generated X amount of savings, roughly?
It's probably too early to tell, because once we kind of got this up and running, you'll remember this from our many presentations a couple years ago when you were on the TennCare committee. Once we got
there were
everything-
many
Right.
presentations, yes.
Because remember, we paused renewals while, per the federal requirements, while we were getting that system up and running. We finally got it ready, and then we have the public health emergency, and we have to pause again. But remember, our enrollment was trending down.
Right.
And then, so we never really hit what we would think of as our normal. We don't really know what that is, which is why it's kind of hard to project where we think we're going to be when all this is said and done. So I think it's too early to tell, even though it's now 5 years post implementation. But because for the last 3 years we've had to pause, and been in such just unique circumstances, I think it's still too early to tell.
Well, I think that would be of interest to this committee. So as we kind of walk through over the next couple of years, just as you move through, just keep that in mind, and that's something I think would be important within the next year or two for this committee to be able to see those numbers.
Yeah.
Thank you.
Chairman Crawford.
Thank you, Madam Chair Lady. My question has been answered.
Sorry, Chairman Crawford, I'm not paying as much attention as I should have here. We have Representative Parkinson with the question.
Thank you, Madam Chair Lady. You all have programs for caregivers, am I correct? Yes.
We do.
And those programs, in some of those programs, I'm not sure if it's all of them, is it policy or is it state law that says a caregiver relative that lives within the same household cannot be paid to be a caregiver?
That is policy.
Okay.
Well, it may be in rule, but it's not. There's not a state law to that effect.
Okay. And Madam Chair, if you don't mind me continuing, that policy or that rule, what's the reason for us denying a relative that lives within the same household of being a paid caregiver versus if that same relative lived 2 doors down being a paid caregiver?
That's a policy that's been in place at TennCare for quite some time. We're not the only state that has that policy. I think you try to find the balance between those things that a relative or someone living in the home would typically do versus those things that a paid caregiver would do. And you want to ensure that you're not creating any sort of incentive to what we want to do is we want to make sure that we're providing the necessary services and that we are trying to ensure that individuals can live as independently as possible. And so I think states that have this provision in place, like us, we're trying to find the right balance and ensure that we're not paying individuals for things that a relative or someone living in the home would just naturally do.
Thank you for that, Commissioner. But if an individual is, let's say an individual that lives 2 doors down, but they're a relative, and don't they go through training and the hiring process through your providers to be able to deliver that care?
That's what happens. That happens today, yes.
Right. And so if that's the case, what's the difference between an individual that lives in the household versus the individual that lives 2 doors down, of going through that training and that employment through your providers?
Well, I think the difference is you have a relative of that individual. That relative is living in the home, and you have relatives that would be living in the home that would be providing certain care that typically would not be provided or would be provided even if there was a paid caregiver. And so you're trying to find the right balance between having a hired caregiver that's coming into the home to provide services versus paying a relative that lives in the home for services that relative would most likely be providing his or her child or other individual in the home anyway.
So if that individual then that lives in the home, let's say the grandchild that's caring for his grandmother, he lives in the home, but so he will not be paid to care for his grandmother. So instead, we want to make him move 2 doors down to another relative's house so that he can then go to work for one of your providers and get paid to care for his grandmother whose house he was living in.
Well, there's nothing that prevents that TennCare member from having services provided in the home. It's just a matter of who is eligible to provide the services. So we need to separate it from actual care because that member is going to get care. It's just the policy and the rule speaks to who is eligible to be paid to provide that care.
And I understand. Just last question, and I get that, and I see how. So basically, I just want to make sure I'm clear on what you're saying. Basically, you're saying that we don't want to pay them because they would do it for free, and the flip side to that is, if that person were a paid caregiver or were eligible to be a paid caregiver, they wouldn't then have to leave their loved one and go get a job somewhere else because their job could be.
Representative Parkinson.
Yes, ma'am. I'm wrapping it up, ma'am.
No, we are talking about redetermination today. I think your questions are, more appropriate during our regular TennCare hearings because we are focused today on the redetermination process.
Thank you, Madam Chair. I got you. Okay, thank you.
Representative Miller.
Thank you, Madam Chair Lady and Director. Thank you all for what you do. I think for me and maybe for the rest of us, we kind of want to be assured that any Tennessee citizens that's eligible for TennCare is not being left behind. You know, I know that's very general, but not to be redundant. But for an example, Chair Lady did mention, she gave an example of 65 and older, and for whatever reason, maybe they did not even know that they were being determined if they were going to stay on TennCare or if they were going to be eligible for TennCare. And when the leader talked about Chart 4, you know, he sort of mentioned that drop. January 20th, we had 1.4, high peak March 23rd. Between May, we're at our highest. Then we began to drop, as of today, 1.5 to between 1.5 and 1.6. Want to know what happens to those individuals. Can we be assured that they are eligible and they've given an opportunity to stay on TennCare? that's where I'm going with that. Your call service center, is that set up where you're receiving calls, only incoming calls, or are you calling output?
Yeah, our service center can perform outbound calls. For example, we talked about someone who can't hold and they want to call back. Then they put in their number, and then our service center will reach out to them later in the day.
So every potential eligible citizen has a residential line or a cell phone or something. Are you all actively and positively saying, we're going to do the calling, we're going to follow up with the call, and also those incoming calls, you respond to those, but are you doing it in a positive reach out? We're going to make that first call.
We, as part of the nudging, we are reaching out to everyone for whom we have a phone number in the system. Both TennCare is doing that, and our managed care organizations are doing that.
Okay, thank you.
And Representative, I want you to know that we share your goal. We want every eligible TennCare member that wants to maintain coverage to maintain coverage. It's not good for us for people to be removed and then come back on. That's called churn. It's not good for them. It's not good for us. The reality is, in order to be eligible, you have to respond. That's just the law. It's federal law, state law, and so that's why we've made such a great effort to get the word out there, to communicate, to encourage people to give us to receive text messages and email addresses and set up a TennCare Connect account so that we're not relying solely on the traditional mail. Because all we can do is mail those packets to the address that we have on file. That's all we can do. The other thing I would point out is that anyone that is deemed ineligible, we provide information to the we provide referrals to the exchange, the insurance exchange, through the Affordable Care Act, and then the federal government will reach out to those individuals.
Well, Director, I think that you've answered all the questions that I'm aware of, and we thank you again. I want to add to Leader Lambert's comments. I think a number of us were very concerned about how this process might go and what sort of chaos might ensue. So, so far, we have, yes, knock on wood. But we thank you for the work that's been done in your department to do that. But I think I continue, and maybe some others continue to have concerns, with that portion of the population that is non-electronic, and they might not even have a phone, honestly, and not to throw rocks and stones at any federal agency, but I hope that your mail at home is better than mine has been for the last few months. I've been delivering mail to my neighbors and hoping that they're doing the same for me, and there are days I don't get mail at all, and then I get a whole box full. So the postal service is not the most reliable methodology at this point in time in my mind. And plus the fact that a lot of these people are transient and you have bad addresses anyway. So particularly any information or any focus that you can continue to put on making sure that we are doing everything that we can to certify particularly that over 65 population. It seems that we're doing a good job on our children, which is great, but those folks who are in nursing homes, assisted livings, or again, relatives are providing care that they're probably stressed out already, and they may not have the most capability either in terms of electronic savvy. So we just would ask that you would continue to make sure that we're doing everything that we can to keep those people from falling through the proverbial cracks. So thank you, and thank you for being here today.
Thank you.
Next up, we will be hearing from our financial institutions. Commissioner Gonzalez and his team, I hope that they are somewhere close by. Welcome, Commissioner. And are you on your own today? So you have,
I think we
oh, there you
have
are.
some folks coming in here. Okay.
Not that you aren't perfectly capable of handling it on your own. I just wanted to make sure. So welcome, and thanks for coming in on the front end of the budget making process, or the front end of us hearing about it anyway, and sharing with us some of the information and some follow-up on some issues that we had discussed last year. With that, I'll just ask you to go ahead with your presentation.
All right. Well, thank you, Chair Lady, members of the committee. With me today is Michelle Berry, our Assistant Commissioner and Chief Operating Officer. And also in the room is Todd Staley, our Assistant General Counsel, Legislative Liaison, Daniel Espenson, Senior Counsel with us, and Tommy Pendergrass, Fiscal Operations Analyst. Our budget request is for $33 million and 160 positions. This is a recurring base budget with no cost increases. And let me provide some background information and speak to goals and issues that we're working on. As you know, our primary goal and mission is to provide for a safe and sound banking system, but to also give institutions the ability to contribute to economic progress of the state and the nation as a whole. We call that regulatory balance, and we seek to find that by tailoring regulation to the merits of each institution, avoid a one-size regulatory approach. As a reminder, our department regulates state banks, credit unions, trust companies, and thousands of non-deposit companies such as mortgage, payday, and money transmitters, as well as others. We're fully funded by the institutions we supervise. We do not take any taxpayer monies. As far as the condition of the Tennessee banking system, great majority of banks and credit unions are in a good condition. They're serving their communities. Our department is in a mobile working status. As a consequence, we're saving hundreds of thousands of dollars in operating costs to the industry on an annual basis. At the same time, some industries are growing significantly, which certainly challenges us to be as efficient and effective as possible. For instance, the number of licensed money transmitters has doubled since 2015. During this past session, we recommended and you enacted a significant update to the Tennessee Money Transmitter Act that had not seen a major update in 30 years. This was critical to the well-being of so many of our citizens that rely on these non-bank transmitters that do not have federal deposit insurance. Instead, citizens rely on state regulators all across the country to ensure that the funds they entrust to be transmitted in Tennessee or even throughout the world safely reach the designated location. In 2022, there was $36 billion in funds transmitted in Tennessee. On the banking side, while we've seen consolidation over the last decade, we've also seen the Tennessee banking system grow over 350%. And much of that growth for well over a decade has come from national banks that would rather be regulated as a state bank by our department and the state of Tennessee. The most impressive growth, though, has been in the Tennessee trust industry. 5 years ago, we supervised $70 billion in trust assets. Today, the Tennessee trust industry is about $270 billion in assets, and we don't see that slowing down at all. This has resulted from a great collaboration over the last 25 years, starting with Governor Sundquist in our department's legislation in 1999, and continuing with Governors Bredesen, Haslam, and Lee. And we're grateful to all of you as well, and the General Assembly as a whole, for your efforts to achieve this, along with the industry and the private trust bar. And it's going to take constant work to ensure that we remain one of the top 2 or 3 trust jurisdictions in the country. To that point, we're proposing legislation this session to update how we assess our annual fees on banks and trust companies. In a nutshell, we're proposing an amendment to the banking fee that eliminates our reliance on the fee set by the federal regulator of national banks. For decades, state banks have paid no more than what a national bank of the same size would pay based on the fee set in Washington. However, over the last 5 years, Washington has reduced relatively smaller national bank fees as the federal regulator can fall back on assessing some of the largest banks in the world. Over time, that will narrow the available budget we can establish and also results in delegating to Washington the decision as to what Tennessee banks pay in fees. A particular concern is that because Washington has reduced fees in 4 of the last 5 years on the smallest national banks, could it be the case that perhaps one year a significant decrease could be made that would result in our department not being able to fully fund our operations and having to ask federal regulators to regulate Tennessee banks instead of our department? This is not an effort to increase fees, but to simply stabilize our assessment process and eliminate a reliance on Washington. On the trust side, trust company fees have been basically $1,000 per trust office for at least 30 years without change. This is the last industry assessment that has a set fee and is not budget-based. As I mentioned to you, trust assets under our jurisdiction have grown from 70 to 270 billion in about 5 years. As a consequence, we added a full-time trust employee over a year ago and believe that $1,000 per office is not going to adequately pay for the regulation of the industry going forward. The only other way we currently have to fund our trust regulation is collecting on the cost of exams. So an alternative, which I think is a mistake, is to increase the cost of exams, or worse, to engage in more exams, whether the industry needs it or not, just to pay our bills. That's not how risk-based regulations should work. So we're coming to you with this proposal to establish a trust industry regulatory budget-based approach, the same that we have had with banks for many years, based on a pro rata share of assets, and eliminate a one-size-fits-all trust fee that has no relationship to our budget. Another thing I'd like to mention is the progress from the creation of an internal IT supervisory group about 4 years ago. Cybersecurity is a significant risk for our banking system, and we've staged cybersecurity exercises with financial institutions on an annual basis. And from an internal standpoint, perhaps our greatest challenge remaining is staffing in certain areas and then salaries to retain and create more experience. The recent statewide compensation effort has made a significant positive impact on department compensation, especially in the entry-level bank examiner area, but we continue to review that situation closely. And with that, we're happy to try to answer your questions.
Thank you, and I'm sure that you have preemptively answered a number of questions with your presentation, but I do have some folks on the list. Leader Cochran, I believe you're first.
Thank you, Madam Chair. And so you mentioned this in your presentation last year, and then just a few moments ago, Commissioner, about the Money Transmission Modernization Act. And so we realized that didn't go into effect until January 1st. Given that, though, how does your department maybe anticipate, as far as the regulation of money transmission industry, how soon will this law's effects be realized on the industry? When do you think we might see that, and then what type of effect do you think it may have?
Well, we've been regulating this industry now for about 60 years. Of course, this is a major update. I do think it's going to have a good impact with respect to capital, with respect to liquidity, bonding, because we've updated those prudential standards for the sake of citizens to have a healthier industry. I don't think there's many institutions that are not going to be able to meet those standards, but there may be some that need to improve in those areas. So, that's going to be probably one of the impacts, but one of the things we're really watching closely is whether other states are going to also adopt this act, because this is a national effort. So there have been a number of states that have. There's other states that are in the process of doing so. Our act will actually be stronger if other states adopt it as well. So that's what we're watching closely, but I think it's going to have a good impact.
And to that same point, that was going to be my follow-up question on other states. Do you know exactly how many or which states have followed suit or have enacted something similarly?
There's been a number of them that have either enacted or proposed. I don't have that. We can get that number to you, but it is a nationwide effort. And this has been done through the Conference of State Bank Supervisors, the professional organization of banking commissioners around the country. It's been a number of years in the works. I remember back in 1991, actually working on a committee of regulators to try to get this thing off the ground. It's taken a long time, but I think there is a real effort now around the country to do this.
Thank you very much.
Representative Lynn.
Thank you, Madam Chair. Commissioner, always nice to see you. Thank you very much for being here. Can the department provide an update on the state of security in our state-chartered institutions? And has the growth of AI had any effect on the landscape of the situation? We don't really hear too many breaches in state-chartered institutions, but you would know it all.
So the health of the industry, you were asking about the health of the industry, correct, in general? Health of the industry is good. This, as you all know, it's been a very challenging last 4 years with COVID and the push out of federal COVID relief and banks flush with liquidity, flush with cash, increase in interest rates in a significant way in a short period of time. Very challenging to manage the deposit relationships that institutions obviously need to have. And so one of the things we're looking at there with that increase in rates is, what will that impact be on credit with respect to commercial lending that may have some renewals later on in the year and going forward, perhaps renewals at higher interest rates, the impact on borrowers. Consumer debt has increased significantly. So all those things are challenges, but the industry has done, I think, a very good job of being able to manage through some very challenging times. As far as you mentioned AI, the regulatory group that I talked about in my remarks, it's been about 4 or 5 years that we put them together, focuses on IT assessments of our institutions. And we needed to do that because cybersecurity is front and center. It's a major risk, and our institutions, once again, are working to deal with all those issues. So I feel good from that standpoint. As far as AI is concerned, I have that conversation with head of our IT regulatory group from time to time, and there are probably applications that core service providers are providing to banks, for instance, that may have AI as part of that program. It may be more machine learning at this point rather than generative AI, which is more creative. So one of the strategic goals that we have as a department is to understand emerging technology and to map it. So, in fact, I was just talking with our head of our IT regulatory group this morning, and asked him specifically, we're going to be mapping AI in the industry, and he said yes. So that was fortuitous that I asked him that question.
And so far as how are the banks doing with security for their depositors and their customers, their people that make loans to? What is the state of security? Are we seeing any difficult breaches? Where are these attacks coming from? Do we even know that? Are they massive, or are they more the federally chartered? Because I really don't hear much about the state chartered having attacks, but maybe I just missed it.
There are breaches of information from time to time. The great majority of those breaches are coming from third parties that institutions may be doing business with. So that's one of the reasons why we are looking at third-party risk management, those relationships with third parties, with fintech companies and others, very closely. And that's one of the things that we ask our institutions to focus on is how are they managing that relationship with third parties? Because most of the issues with respect to breaches are coming from those other parties. But I also say that, you know, when I mentioned the strategic goal, you know, having said all that, it's important to give institutions the opportunity to adopt technology, particularly for, I think, smaller banks and credit unions, to have the opportunity to survive, for one thing, to be competitive. Of course, along with that comes a great need to have appropriate risk management, because as you increase your technology profile, you're probably also, at times, not always, but also increasing the risk profile along with that. So we are really focusing on those issues, and I think the industry is as well.
Representative Sparks.
Thank you, Commissioner Gonzalez. With the growth that you mentioned and the changes in the industry, does the department, you feel, have enough experienced staff? And another question I've got is the salary adjustments in the recent years help to maintain some of that staff.
Yeah, that's a great question for us. It really is one of the challenges. You know, historically, probably the biggest problem that we've had is in our bank examiner area. It's been challenging to hold on to some of those examiners, particularly after they get some experience. And quite frankly, the federal government has taken some away from us because they have historically paid more. And they still pay more, but we're getting closer. We're doing better. So we're in the process of filling some of those vacancies. We had actually put some of the vacancies, some of those vacant positions on hold pending the potential, you know, acquisition of our largest bank, which did not happen. So now we're in a mode of hiring once again. Understand that we're making some progress there. We've increased that entry-level examiner salary from 38 to 50 just in the last year, you know, thanks to the effort that everybody's been so supportive of. So we're making some progress there. We need to do some more. The federal government continues to push ahead as well on salary, so there's still a gap that we need to fill, but we're doing better. We're making some progress.
Also, on the online fraud that someone mentioned earlier, when you see the rise of Venmo, Zelle, PayPal, and some of that, what do you see has got maybe the best reputation? You may not want to single out one, but how are you seeing with people out there with these things? Because I get a little nervous. I use Venmo, but I get a little nervous. And what kind of feedback are you getting from folks?
You know, I don't hear a whole lot when it comes to the money transmitter area, and those are the companies that are subject to the, you know, to the Money Transmitter Act that we all work together to update this past session. But there's significant risk there because there's no federal deposit insurance.
Yeah.
So we're relying on capital standards under state law. We're relying on liquidity standards. We're relying on the bond under state law. And relying on states being able to work together to ensure that these companies are operating in an appropriate way.
Yes, sir.
So there's a lot of activity from the state side to do that. But in my opinion, it really helped us to have that update that you all approved this past session.
Which one do you use? Zelle or Venmo?
Representative Sparks, we're
probably would not
crossing the
be
line into
appropriate for-
personal.
Thank you so much, sir.
Thank you.
Representative Gant.
Thank you, Madam Chair. Commissioner, thank you for your time and being here with us today. Concerning Blue Oval City, which is partially in my district, I think last year you mentioned that the department was working with the West Tennessee community banks to prepare for the expansion of the Blue Oval area, that ecosystem. And can you provide us an update on the preparations taken to prepare for future growth in that area?
you know, one of the things that I've asked a few of our bankers to do is just keep me updated on the opportunities that they see and what they're doing in that regard. So we have, you know, we have some community banks, as you well know, that are in that area that are doing things to help the development. I mean, there's so much to be done, and you know, there's obviously a great partnership between the private sector and state government to be able to make those things happen. So, you know, I heard from one banker not too long ago that still a lot of challenges left, but I think they're, you know, pushing forward and making some progress there. So, you know, one of the things that I've mentioned to our staff is, you know, communication is just so important with our community banks in this regard, because we all need to be on the same page and understand what institutions are trying to achieve, what the risk is, so that we as a state government do not hinder that kind of economic progress by just simply not understanding what they're trying to achieve. So it really takes constant discussions and communication. That's what I hope that we can provide, is some comfort from a regulatory standpoint, that when institutions seek to have a role in that development, that we understand what's happening and we can work and partner with institutions to make sure that that's tailored in an appropriate way from a risk standpoint.
Representative Shaw.
Thank you, Madam Chair. And mine's more a comment than a question. I just kind of wanted to thank you, Commissioner, for some of the policies and procedures you put in place in the banking for small businesses. I don't think any of us as small business men and women like some of the things that you instituted maybe 5 or 6 years ago, but I think at this point in time, it has really helped small businesses. And I just want to tell you I appreciate that, because it kind of helped us to get our houses in order as well. And I appreciate what you're doing in the banking business, in the industry. Thank you so much.
Thank you.
Yeah.
Chairman Hawk.
Thank you, Madam Chair. And Commissioner, thank you very much for being here. We were talking earlier. How many governors have you served as commissioner under?
3.
That's impressive. The answer was 3. If you didn't hear that, that's very impressive. So, and been with the department for a long time. So, thank you very much for your career of work. I do want to go down in the world of investing. We all know that slow and sure wins the day more often than not. But what type of latitude do we have at a state level? Credit unions, banks, the borrowing limits, the lending limits that they have. Do we have any authority over that, or is that all federally governed?
No, there is state law with regard to lending limits, and you know, it's all based on the premise of trying to manage concentrations in an appropriate way and not have lending to one entity in a to take that significant amount of an institution's capital. So that's been there for some time. And both state regulators and federal regulators, you know, we work together to look at those issues and others.
Thank you, Madam Chair, and thank you for that answer. I appreciate that. There's several folks I hear from on a regular basis say, if I could, you know, I could loan this many more millions if I just had the authority to do it. And whether that's the right thing or not, I know that's a balance that we have to continue to look at. Tell me a little bit, as a state and Department of Financial Institutions, do we give direction to lending institutions in terms of ESG policies of the borrower? Do we give direction or policy to lenders in this regard?
We do not, as a state banking department. I cannot recall the last time that an ESG issue has surfaced to me. I don't recall anything in quite some time. It just doesn't come up in our regulatory activity.
Thank you. Thank you, Madam Chair.
Mm-hmm.
Thank you, Commissioner. That concludes the questioners on my list, and I, too, would like to add my thanks to Chairman Hawks for your long years of distinguished service to the state as commissioner, and then even prior to that. As having been a part of the banking industry at one point, I appreciate the work that, and we were a state chartered bank, I appreciate the work that your department does to make sure that our industry is healthy, because it is, it's part of the foundation of the economy of our state. And I thank you and your department for the work that you do, and as you are, also appreciate your forward thinking and looking at, technology is changing everything, including the banking industry and the financial industry. So we appreciate, I'm glad to hear that you are mapping the AI and really trying to get a handle on how these new technologies might impact, and what every technology that's, it's going to be the greatest thing since sliced bread, but it also always carries inherent risks. So making sure that we're prepared for that is important, and we're glad to have you at the helm so that we can be certain we're as ready as we can be for the implementation of those. So thank you again for being here today, and thank you for being a self-funding agency. Doesn't require budget from our state and from this committee. So again, we appreciate you for many reasons, not the least of which is that you don't ask us for money. So thank you.
Thank you so much, committee. Thank you.
Next up, we have the Tennessee Public Utility Commission. Good afternoon and welcome, ladies and gentlemen. So, Chairman Hilliard, if you want to introduce yourself and those with you today, and
Oh, I'm sorry.
Mm-hmm.
Can you hear me now?
Yes, we can.
Earl Taylor, our Executive Director, and Samantha Lehman, our CFO from the Tennessee Public Utilities Commission. And as you all know, the Tennessee Public Commission is the share. We are also a self-funded agency, so we do not get any state funds. But we're glad to be here this afternoon, Madam Chairperson.
We love you as well.
And for those who don't know me, I'm Herb Hilliard. I'm Chairman of the Tennessee Public Utilities Commission. I think I know a whole lot of you, but I'm going to provide an overview of the commission as well as share our proposed fiscal year 24-25 budget and highlight some of the commission's activities. The Tennessee Public Utilities Commission in various forms has been in existence since 1897. Predecessor agencies of the current commission include the Tennessee Regulatory Authority, the Tennessee Public Service Commission, and in its earliest form, the Tennessee Railroad Commission. The commission is responsible for the oversight of investor-owned public utilities that provide natural gas, electric, water, and wastewater services to over 1 million Tennessee residential consumers and 60,000 commercial and industrial customers. The General Assembly has charged the agency with ensuring that the utilities under its jurisdiction provide safe, reliable, and essential utility service at rates that are just and reasonable. The process by which reasonable rates are established is comprehensive and transparent. Discovery, pleading, and deliberations are conducted in accordance with the State Uniform Administrative Procedures Act. Public notice and participation are vital components in determining a reasonable rate of return that is in the best interest of the utilities and the customer it serves. The setting of rates includes an opportunity for a utility to request an alternate rate mechanism in lieu of a general rate case proceeding. These alternate methods allow for a more streamlined rate-setting process, enable a utility to avoid a lengthy and expensive general rate case proceeding. The Commission is also responsible for the safe and reliable distribution and transmission of intrastate natural gas pipeline facilities. Our Gas Pipeline Safety Division conducts annual audits of natural gas providers as well as perform intrastate gas pipeline safety inspections. We inspect over 40,000 miles of distribution and transmission lines that provide service to over 1.1 million Tennesseans. The Commission also processes applications for utilities to provide specific services, which includes a review of the technical, managerial, and financial ability of new and established utilities, requests to provide or expand service, resolving certain disputes between telecommunications service providers, as well as 2 consumer programs geared toward assisting the disabled community in Tennessee, the Telecommunications Device Access and Relay Program, and the Deaf-Blind Equipment Distribution Program. The Commission also serves as a forum to receive consumer complaints against regulated entities and seeks to facilitate the amicable resolution of such complaints. We also oversee the state's Do Not Call program, which was expanded last session to include Do Not Text. In addition, we implemented Public Chapter 11111, which requires utilities to annually certify to the Commission that they have a cybersecurity plan. We will include a compliance update in our annual report to the legislature, which will be released next month. We're unique, as I said, in state government in that we are one of a small number of self-funded entities, meaning that we do not fund through the general fund. Our budget does not include any new funding requests. It is funded through a dedicated mix of fees collected from regulated entities, federal reimbursement, and reimbursements from state and private entities for expenses related to services provided by the agency. The proposed fiscal year 24-25 budget for the Commission is $10.4 million. This reflects approximately $9.4 million in state funds and $1 million in federal fund. The state funds are derived from utilities under the Commission's jurisdiction and revenue dedicated to supporting communication services for the hearing impaired. The federal funds support the Gas Pipeline Safety Program, the Deaf-Blind Equipment Distribution Program, and the Underground Utility Damage Prevention Program. We appreciate the opportunity to present our budget and highlight of the agency's effort to improve the lives of the citizens of the state. The Tennessee Public Utilities Commission continues to streamline its activities, deliver services to the utilities and taxpayers in the state in an efficient, effective, and customer-focused manner. Thank you for your time and attention. I'll be happy to answer any questions, and if I can, I've got enough people with me to help me.
Thank you, Chairman. We appreciate you being here and your work and your comments. We do have a list of folks who have questions, and I'm going to start with Representative Barrett.
Thank you, Mr. Chairman. Good afternoon. How are you?
Fine. How are you, sir?
My question's about the mega site in Memphis and the gas pipeline that was installed there. In April of last year, the Commission approved a petition for a natural gas pipeline for that site to be built at Blue Oval City. So my question is, after approving that application or that petition, will the Commission have any additional involvement in the construction or installation of that? And if so, can you explain what role you will be playing in that?
Yes, sir, and I think you are aware, we kind of fast-tracked that pipeline to get it in there so they could get started, because that'll have a big impact on West Tennessee and the state. We will be responsible for inspecting that pipeline. So far as the construction and all that, we will not be involved in that.
Do you have a timeline? I'm sorry, Mr. Chairman, do you have a timeline as to when that will be?
No, our Pipeline Safety Division will look at it after it's been there for a period of time and put it as a part of their normal schedule of inspecting.
Thank you very much.
Thank you.
Representative Garrett.
Thank you, Madam Chair. Good afternoon. Thank you all for being here. We appreciate that. I've got a question regarding some vacancies. It looks like y'all got funded 55 full-time positions, and 13 of those are vacant. And 9 of those have been vacant for more than a year. So I'm going to kind of go over the 3 questions, and then y'all can respond on what those are and why those vacancies exist. Are you all having some issues preventing the Commission from filling these particular positions, and are these vacant positions causing any delays in hampering the Commission's abilities? And then finally, could the Commission eliminate any of these vacant positions where they wouldn't be necessary or causing any type of delay in service, et cetera? So those are kind of my questions as it relates to these vacancies that we see. And of course, the 9 that have been there for a year is a little bit troublesome. So what do you all Give me some insight on that, please. Thank you all.
Mr. Taylor, Executive Director, will answer that one.
Great.
And I'll,
Well, thank you for the question. We're not hampered by the vacancies. We're trying to run a very business-like, streamlined operation. So we're fully staffed. The vacancies that are there are more to enable flexibility in case the legislature brings some further responsibilities. So we've given up some positions in the past. We're happy to look at that, but it's more of being efficient and effective, customer-focused, like Chairman Hilliard said.
also, like I say, even though they're vacant and we have it in our budget, we don't spend the money, so we're not spending the money frivolously.
Okay. Thank you for that. When would you all get to a certain position where if you're running as efficient as you say, which I have no reason to doubt that whatsoever, but when will we pull the trigger on let's not having these vacancies out there any longer and go ahead and eliminating that so that it wouldn't be showing up on your, for budget purposes?
Well, in reality, you should probably always have some vacancies. You're never going to be 100% staffed. It's not always the same jobs each year. It just shows up as that number. And actually, it's good to have some flexibility where you're not 100% staffed, and we're never going to be 100% staffed if we don't need the jobs.
One more. So will your current estimated ask for your budget include these 9 vacancies or 13 vacancies that are there?
Yeah, the money for those jobs are in our budget. And as I said earlier, if you remember last year, there were some things we may have had to take on as a part of the new AG's program related to moving the CAD over to the agency. We never know when we're going to get other opportunities to do our job, to do what we're told by the legislature to do. And so, like I say, we keep those vacancies there. Sometimes they're not the same job each year. And if we don't need them, we won't spend the money. So I'm not sure that we don't view it as a big issue.
All right. Thank you all very much. I appreciate your answers. Thank you.
Chairman Boyd.
Thank you, Madam Chair Lady, and Chairman Hilliard, appreciate y'all coming today. And have a question. In 2022, we passed legislation that required investor-owned utilities that fell under TPUC to create a cybersecurity plan and to report to y'all once a year. And so this would have been, 23 would have been the first year that you got that report, and I was just curious how that was going, if you could update this committee on that.
Yes, we did, and we went out to our agencies we regulate. We got all responses back and plans back from all but 6. So that was about 76% of the people responded. Those 6 that did not went, and of course this is the first year. Next year, if they do not, then we've got some authority to fine. But those 6 that are involved only serve less than 1,000 customers combined. Most of them are also probably very manual, which means there's very little computer access that somebody could exercise with cyber security risk on them.
Chairman Boyd.
Thank you, Madam Chair. Well, you actually answered the next one I was going to ask is, are these kind of mom and pop operations that aren't tech savvy? And I'll lead into my last question. I know in December y'all released the telecommunications data report, and that comes from the FCC. And at the legislature, usually when we hear about broadband deployment or who has internet or how fast it is, we're getting that from ECD. So I'm not sure how close attention y'all pay to this, but I was just curious, have y'all noticed the number of fixed internet providers going up since all of these federal dollars and state dollars have started flowing to them, or has it remained about the same?
Of course, as you know, we don't regulate broadband in any respect. Now, we do provide a report that we get from the FCC. At this point, I can't tell you exactly how many dollars, but we'll be glad to I'll have someone get back with you and give you the answer.
Chairman Boyd.
Thank you, Madam Chair Lady. You don't have to get back with me. I was just curious because we're always hearing about where those deserts are that don't have broadband or people that have slow. I've just never really seen a study that showed how many providers are in each county. And I know that y'all I figured you probably just took that from the FCC and then just gave it to us. I just didn't know if y'all studied it in much detail. You don't have to get back with me. Okay. We'll figure that out. Thank you.
Chairman Faison.
Thank you, Madam Chair Lady. Good afternoon. Good to see you all here today. Happy New Year to you.
Same to you.
In December 2023, TPUC published its annual report comparing Tennessee telecommunications, electricity, natural gas, water, and wastewater utility rates to other states. This report is applicable to rates charged in 2021 to 2022. And I just had two questions on that for those in this room that didn't get to read that report. How do the utility rates charged in Tennessee compare to the other southern states?
Very good question. I've got the head of our utilities division here. I'm see if I'll ask him to come up and respond to that.
David Foster, Director of Utilities Division. I can't say that we've done any specific studies per se between the utilities that we regulate in Tennessee with other states. I am a member of a few national committees of gas and water and electric, and the rates generally, you know, like for natural gas, they will vary on how close you are to the Gulf of Mexico where you get your natural gas, because the major portion of your bill is not the fixed portion. It's the commodity portion, which we do not control those rates. The market determines those rates. So the further you have to transport it, the more it's going to cost. So that would be one difference in gas rates. And of course, economies of scale, depending on how big a company was. You have Southern Company, which has so many customers that they have economies of scale, and their rates may be lower than some of the smaller companies. But in general, what I've talked with other states, that the rates are very similar. The structure is very similar. You have to balance that. You got to keep it affordable for residential rates, but also recognizing you have to be competitive to draw businesses in the states and maintain them also. If you'd like, we could try to prepare some specific study, but you also have some that are investor-owned, some are city-operated, which you never know which resources that they're using to run a particular company, if they're using water revenues to run the electric department or vice versa. But I would say that the rates within the southern states are going to be very, very comparable.
I'll add a little bit to that. As you know, electricity would be a big part of that, and we only regulate about 55,000 customers in the state. The rest of it's TVA.
Thank you, guys. And just one follow-up, and you kind of hit on that. When it comes to inside of Tennessee, do you, from your knowledge of what you know, and maybe you don't have this, are the rates across the utility types rising at a comparable rate from Memphis to Mountain City, or do you have some that seem maybe jumping up quicker than others? Does it feel comparable inside the state of Tennessee for all the different types of utility rates?
I can really mainly talk to the gas companies under our jurisdiction, which would be Piedmont Natural Gas, which has a couple 100,000 subscribers, Atmos Energy, which serves a large portion of Middle Tennessee, Chattanooga Gas Company. Their commodity rates are all going to be similar because they're similarly sized, and they can get discounts in the open market and gas contracts. For smaller utilities, they may not be able to get discounts from the pipeline and providers because there's not ordering as much gas, so the commodity might be higher. I am not that familiar with the rates like for Memphis Light Gas and Water, but I would assume that the commodity rates that they purchase would be similar. The infrastructure is similar, but again, economies of scale of larger companies would probably lessen the impact to consumers.
And I'm sure you're aware that we do not regulate municipal utilities and co-ops.
I had just a question. I know you all, there are a number of things that you don't regulate, like telecom, but there are still a number of things that you do. How often does your commission meet?
We meet, we have scheduled meetings once a month, There have been a few times we've canceled because we didn't have enough on the docket, but we're scheduled for once a month.
So if you do not have it once a month, it's because of just lack of agenda items?
Lack
or
of agenda items, yes.
Okay. All right. Well, thank you. I see no further questions, so thank you for taking the time to be with us today, and thank you again for being a self-funded organization. We do appreciate that very much.
Thank you.
And we will ask our treasurer, who hopefully is somewhere nearby, to we're a little ahead of schedule, Treasurer Lillard, so thank you for being more than prompt.
Who's going to do the clicker? Shelley, she's going to do the clicker.
Treasurer, thank you for being here. I know we had talked about doing this, having this conversation a little bit earlier in the year, well, I guess later in last year, but because of some issues, we rescheduled to today, but there's just a lot of interest. This legislative body, this General Assembly has a lot of concern and are attempting to do what we can to address the mental health crisis in the state, particularly with our children K through 12. To that end, we set up the Mental Health Trust Fund, and I think we just like some information from you as to the health of the fund, the status, and what we can expect from that in terms of how it might impact the provisions that we're able to make for mental health for our K through 12 students. So with that, I'll just ask you to share with us whatever you'd like to enlighten us on how we stand on the Mental Health Trust Fund at this point.
Okay, certainly, Madam Chair. Thank you very much. I'm David Lillard, Tennessee State Treasurer. I think I'm on here. Yep, we're on. I have Michael Breakbill here with me, Chartered Financial Analyst, who's our Chief Investment Officer. And we also have Shelley King, our Director of Communications over here, is going to help us with the presentation today. Y'all have a set of slides in front of you that we passed out to the staff previously. In addition, we're going to have it up here on the screen for those who might want to look at it that way and everything. As Madam Chair said, the K through 12 Mental Health Trust was established in 2021. If you look at slide number 2 on the slides that we have, gives a little timeline for this, just to get this back in everybody's mind here at this point. The Appropriations Act from 2021 was signed by the governor on May 27, 2021. Subsequent to that, in March of 2022, the program was funded under the Finance and Administration Department's work plan with an initial transfer of $250 million from the funds of the state to the Treasury Department to establish that trust fund. On June 14, 2022, the K-12 Mental Health Trust Fund had a board meeting of trustees of the fund, and they approved an investment strategy. They also approved a policy, an investment policy, and approved spending of a maximum of $8.75 million out of that particular fund. Subsequent to that, having received the $250 million, the funds were invested in high-quality, long-duration fixed income instruments that this fund is a fixed income fund. It does not invest in equity securities, but only in debt securities, i.e. fixed income securities, roughly at the end of June 2023. Now, y'all remember that this is at a time when interest rates were historically low. We'll see that in just a minute in another slide that we'll look at here in just a minute. And so beginning in June of 2023, or about that time period, we began the transition into the investments. As of June 30, 2023, this fund had an end of the fiscal year value of $246.6 million. Now, you'll immediately note that that is less than $250 million, which is what the legislature approved and what was transferred to Treasury. And you ask, well, how could that happen, you know? This has to do with the intersection of accounting principles versus what I'll refer to as cash flow principles for investment. On the one hand, from an accounting standpoint, for governmental entities, those that are subject to the Governmental Accounting Standards Board, which is the state of Tennessee and other governmental entities, we are required to use what is called mark-to-market accounting as of the end of the fiscal year to value investments. So as of June 30, 2023, when we had invested in these items at an earlier date and interest rates were rising at that time, those fixed income instruments that we invested in were, from an accounting standpoint, worth less than what we bought them for from a mark-to-market standpoint. It's as if you bought a 10-year Treasury bond and you intended to hold it for 10 years, and that bond paid, let's say, 4%, you know. If it paid 4%, and then let's say a few months later, interest rates went to 5%, you know, you could buy another Treasury bond for 5%. Well, you're still holding your bond at 4%. If you mark that bond at a later date, mark to market, it would be what we refer to in the market as underwater. It would be at a lesser value than what you paid for it. So that's what you're seeing reflected in this value of $246.6 million. Now I'll get into a little bit more description of why that is here in a minute. Now this is different from the amount of cash that's being generated off of that bond. Let's go back to the example of the person who buys a 10-year Treasury bond that has a 4% rate on it. Well, it's throwing off 4% of whatever you paid for it. If it's, you know, $100 million, then it's $4 million a year that you're making off of that. And it's still producing that interest income. Regardless to what the actual value of the principal of the bond is, you're still getting your check from the U.S. Treasury for the $4 million a year. And that's the case with respect to what we're doing here. So we look at two different things here. We look at the accounting principles involved as to how we value this for the state's financial statement presentation purposes and our investment purposes. And then secondly, we look at the cash flow value. And so we'll talk about those two things going forward. Just to give you a further update on the timeline, on November 20, 2023, the K-12 Mental Health Trust Fund Board met and a resolution was passed for a $6 million disbursement at FY 23-24. That is the current fiscal year that we're currently in. And the resolution was passed for a $6 million disbursement in the year 24-25, which is the next fiscal year that we will have coming up here starting July 1 of 2024. And as of December 31, 2023, at the bottom of slide number 2, at the end of that calendar year, now that is not a close of a fiscal year for state government, December 31 is not, but as an estimate, we estimate that the value of the fund is about $256.2 million at that time. Now notice that value has changed from $246.6 million on June 30, 2023, up to an estimate, a mid-year estimate of $256.2 million. That's because the dynamics of interest rates have changed materially in that time period. We'll talk about that in just a minute and everything. So it shows you what happens over time as interest rates change. So in a way, you know, if you intend to hold securities, debt securities, for the full term of the security that you purchased, then the accounting of it has to do with your financial statement presentation during the interim period that you're holding it. But at the end of that period, you're still going to receive all the principal of the bond that you bought. And so you haven't really sustained a loss as to principal with respect to that bond. Slide number 3 just gives you the process that we went through with Veris Consulting to establish the investment modality for this particular fund, and I won't spend any great amount of time on that. On slide number 4 here, we basically looked at two different long-term scenarios here for this portfolio in deciding how to invest it, and we looked at one portfolio of 25% long-duration, highly rated bonds, another of 75% non-investment grade assets, at that, and then also a base case scenario, which would be 100% long-duration, highly rated bonds. We went, you'll see in just a minute, with sort of a blend of that sort of thing, and basically rising interest rates during the period help the long-term expected returns. If you look on slide number 5, this gives the whole sort of history of this fund. Begins over on the left-hand side looking at basically, as I said, May 27, 2021, when the governor signed the bill. If you look at that period down at the bottom, the little blue line at the bottom, it shows the 90-day Treasury bill yield. At that particular point in time, we were still in what we refer to in the investment world as the cash is trash era, because basically we got down to the point on the state investment funds, state pool investment fund for Tennessee, where we were paying, what, Michael, 3 basis points or something like that? 1 basis point, okay. 1/100th of 1% was all we were paying, because that's all the market, would support and everything. And we waived our fees with respect to that, too, to keep it from going negative. And we were concerned at that particular point that we might be faced with the prospect of what happens if you go negative on your Treasury bond rates. You look at, along that same line there, up above there, that gold line is the 10-year U.S. Treasury bond yield rate. If you look above the 2021 numbers there, you'll see there was a positive gap between the low 90-day Treasury bill rate and the 10-year rate. So everything is good in the sense that longer-term debt should yield more than shorter-term debt does. And we keep going on down the timeline here, and you look at the little bit further over to the right on March 3rd, 2022, portfolio funded right there. And it shows that's the day at which we received the money from F&A and from the general state fund to begin investing it and everything. And you notice that's long about the time that interest rates started moving up on the 90-day Treasury bond rate. And also the 10-year rate is moving up some at that same period of time. So we're investing money along about this time period here and everything. But look what happens when you move further to the right. Interest rates continue to go up, as you go across this graph to the right and everything. And it talks about when spending was approved. But again, looking at that blue line, which was the 90-day yield, and the gold line, which was the 10-year yield. And you notice that about September 30th of 2022 was when you had the blue line crossed and went to a higher yield than the yellow line did. That's what we call an inverted yield curve, because you've got now, like today, in the U.S. Treasury bond market, you can invest in a 6-month or less Treasury bond and make more than 5% on it. You cannot make that on a 10-year Treasury bond today. A 10-year Treasury bond only yields roughly 4%. I didn't check it before I came down here, but it's around that amount now. So the bottom line is that we are dealing with a very volatile interest rate environment and a very unusual interest rate environment. In fact, I think this inverted yield curve that we've had here is probably the longest that we've had in modern times in the debt markets in America. So we're not sure exactly where this is going to end, but this is how it's playing out at this particular point in time. So it goes on across here looking at this, and you can see that if you go over to 6/30/23 toward the right-hand side of chart number 5 here, the portfolio value is $246.6 million. So we've got less than the value of the fund from an accounting standpoint. Again, we still have the bonds and everything. That hasn't changed for the most part. There's been a little bit of sales in there to adjust the composition of the portfolio. But you go on further over to the right as of 12/31/2023, as I talked about earlier, and the portfolio value is estimated by us in the Treasury Department to be about $256.2 million as of December of the last year that just closed. Now, if you look at slide number 6, this gives you the implementation of the portfolio, i.e. the composition of the assets that we had. The yellow item up here in the upper right-hand side of this particular breakdown, this is showing 3 different types of investments that compose the asset base for this trust. It's showing a non-rated instruments, basically non-rated instruments that yield about 9% with a duration of about half a year. That is, their weighted average maturity is about half a year or so. Then that's one element of it. That's a relatively small element or modest element of the overall fund. The vast majority of this fund is invested in the assets that are in the blue items here, the blue field here that's investment grade, and it is a yield of 4.6% with a duration of about 10.3 years. So we're long out in the market on this particular thing. And then at the bottom there, you'll see that some of the money is invested in what amounts to a cash equivalent, the State Pool Investment Fund, short-term fund that currently yields, just like the inverted 90-day yield curve that we saw in the 90-day Treasury bond, it's yielding about 5.4%. That's a great return on 90-day money, in today's world, basically, or less than 6-month money. And it has a duration of, just a portion of a year. So those three elements make up this portfolio currently. I'll point out that, as I said earlier, you've got, investment accounting on the one hand, mandated by the Governmental Accounting Standards Board that requires us to mark this to market every June 30th. If interest rates are above where we have bought something at as a fixed income instrument before, then we're going to have a loss on our accounting statement. That does not mean that we actually realize that loss, because unless we sell that security, we have not realized that loss. It is an unrealized loss that we're required to report for accounting purposes. In terms of the interest income that's being thrown off on the other hand, from this particular set of fixed income instruments that we have, for the year ended FY23, we earned over $10 million on this fund. $10 million in cash came in off of these investments. Our estimate for the year ended or the portion of a year ended 12/30/2023 is we believe we've earned about $7.2 million. So basically, so far as we sit here as of 12/31/2023, we've earned about $17.8 million on this fund in terms of the interest that has come in off of it, or the yield from these investments. And indeed, in the State Pool Investment Fund right now, when you include that little portion at the bottom of the sheet I showed you earlier, it has the three different asset classes that are in this fund that comprise it. We have in cash today in this fund, in the State Pool Investment Fund account for this fund, $24.284 million is what's in the bank right now today on this particular fund. It says of 12/31/23. It's an estimated amount. So, I will add one other thing, and that is accounting can depend on how things are accounted for, can depend on who you are, because if you're a governmental entity that's subject to the rules of the Governmental Accounting Standards Board like we are, then you're required to mark things to market on your financial statement presentation date. On the other hand, if you're an entity that is subject to the rules of the Financial Accounting Standards Board, the FASB, which is generally all publicly traded companies and many of your larger privately held companies in the United States, they have a different rule with respect to this type of investment. If you declare securities as a FASB entity to be hold to maturity securities, then you don't have to report fluctuations in value on a mark-to-market basis. In other words, if we were governed by the rules of the Financial Accounting Standards Board in this particular investment, you wouldn't have ever had a financial statement that showed that the value of this fund was $246.6 million. It would have been $250 million plus the value of the interest that had been generated off of it, basically less your expenses and any realized losses that you did happen to have. So from that standpoint, I just want to point out that things look differently depending on who you are and how you look at it. I'll close with that, Madam Chair, and ask if there are any questions that we can answer.
Thank you, Mr. Treasurer. That was a very comprehensive explanation, and I think those of us who just saw the the $246 million. There are all sorts of alarm bells going off when that is,
Right.
as you said, underwater and what we had put in. So it's comforting to know that in real dollars, the way I would measure my bank account, we have more money than we put in. So hopefully that makes everyone in this committee and in the legislature a little more comfortable. Chairman Hawk, you have a question, I believe.
Thank you, Madam Chair. Two questions, and the first, Chairman Faison was wondering, is there going to be a test over this? Because if there is, he needs you to go over it one more time.
You'd like me to go over the rules of the GASB and the FASB again for you there, Chairman?
Okay, he needs to give it Dr. Baum.
He's a smart man. He's from Cock County. They know everything
Sure,
in
yeah.
Cock County, okay?
Legitimate, excuse me, legitimate question as well. Is our strategy with these funds similar to other funds that we manage? Or is there a different philosophy with these than other funds we manage, or is it similar? Thank you.
Hi, thank you. Michael Brakebill, Chief Investment Officer. Great question. When we did the analysis on putting the portfolio together, like the treasurer's slide had there, one of the things we wanted to do was we wanted to leverage things that we do internally and strengths that we have right now. And the blue piece, as an example, in that chart, that is very, very similar to what we do in the pension fund for the fixed income portfolio internally. So we have a high duration, high credit quality fixed income portfolio in the pension, and we basically do something very similar. It has the same benchmark, the same kind of structure, the same characteristics. Similarly, the yellow-orange part, same way. We have a portfolio we call strategic lending, which is securities that are high credit, they have more credit risk but low interest rate risk, and that's what that orange piece is. And of course, the green is the State Pool Investment Fund. So yes, we have similar things we manage in other areas, and we put them all together in this bundle to create this fund. Yes.
Chairman Baum.
Thank you, Madam Chair. I was just going to ask, are you required to hold your bonds to maturity?
No.
Would you ever, if interest rates were to go down, would you ever consider trading?
Well, yes, we would if there was motivation to do that, a particular market condition or whatever. I mean, as an economist, Chairman, you know that I made a lot of money back in the 1980s by buying treasury bonds when the prime rate went to, 18% or something like that. I bought some treasury bonds at that point, and the rates later jumped, and so I had bonds with premiums on them, huge premiums on the bonds because the rates went down from where they were where I bought it. So, yeah, if that happened, and it's happened to us before, we do sometimes trade them.
Yep, and I guess I was going to conclude by saying it looks like an increasing number of economists are projecting that the Fed won't continue to raise rates in 2024. So. Yeah.
Well, of course, you've got, and your point's well taken. You've got another issue, though, that bothers me a lot, and that is the deficits that the United States government is running in Washington and the effect that has on the Treasury bond market generally, the world market for U.S. Treasuries. We're running record deficits at the federal level right now, and that's a concern of mine about, interest rates going forward. You're correct that the Fed saying, well, we're done raising rates, well, that resulted in the recent run-up of the equity markets and all that, and resulted in some of the yields going back down. The 10-year Treasury bond, for instance, it went down to what, Michael, around 3.5% or something like that? 375, something along that line.
From 5.
And from 5, that's right. And now we're back up at 4, again. So something is pushing it back up, and my belief is part of that something is the huge deficits we're running at the federal budget level, because out of every dollar the federal government spends for any reason, about half of that is borrowed money now, and they have to refloat those bonds on the Treasury bond market, to keep that merry-go-round going. So that's a concern.
Thank you.
Mr. Treasurer, yeah, Chairman Williams just commented that wasn't probably the most positive note to end this on, so let's go back and maybe have another question or two. Just, you mentioned that you all worked with Veris Consulting to determine these strategies. What was the cost structure for their work? How was that paid? What impact did that have on the fund?
Okay, Michael, you want to talk about that? The fees that are charged to the fund?
So Veris is our general consultant, and most of their services are spent on the pension fund. So the vast majority of their billing and their focus and our work with them is on the pension fund side, which is obviously much larger than this. We have them on a standard retainer basis, and I can't exactly remember the number offhand, but so we pay them on an annual basis, and the K through 12 is a piece of that, and I don't know specifically how much we pay them, but it's a very small number.
But I think one thing that we can comment on is that for FY '23, as of June 30, 23, this fund, I've got the accounting report here in front of me, we charged this fund $186,227 for an entire year's services by the Treasury Department. That is part of it.
And that includes that.
That's rolled up into that. We take all of our overhead in terms of investment expense and apportion it among all the funds based on their relative size. And so this fund's charge was $186,227 on $250-something million, you know.
And you mentioned earlier in your presentation about the determination of the board to utilize $6 million from this fund in both this fiscal year and the next. Can you just, for those watching at home or those of us who may just have forgotten, tell us who that board is comprised of and when those decisions are made? Is that an annual decision? Is that, just talk with us a little bit about that process.
It's an annual decision that's made by the board, K through 12 Mental Health Trust Fund Board of Trustees. It's myself, I chair the board, and the two finance chairs of the House, our Madam Chair here and Chairman Bo Watson of the Senate, is on it, along with the Comptroller and the Secretary of State, and I think the Commissioner of Mental Health is part of it too. Commissioner Marie Williams is part of that board also. So those are the people who make the decision each year about how much to authorize to pay out of the fund. Of course, that's also subject to an appropriation by the General Assembly. Every dollar the state spends has to be appropriated in one way or another. So even if the board said spend it, if there's not an appropriation, it wouldn't get spent. So.
All right, thank you. Are there any other questions? If not, again, thank you for.
Chairman Love
I'm
had
sorry.
a question, I think.
Representative Love.
Thank you. And thank you for your presentation, Treasurer. Did have a question about the amount of money that you said has been generated so far, anywhere between $15 and $17 million. And that money has not been allocated. So the balance of 256, is there another amount out there that's in another account?
Well, it's all part of the same account. There's part of it is actually divided between the non-spendable corpus of $225 million, and then there's the reserve account or spendable corpus account, which I think as of the end of 2023 had a balance around $31 million in it. So what you do is you take any excess interest you've gotten and you add it to that spendable corpus, and it keeps getting invested, you know, and continuing to contribute earnings to the fund.
Okay, thank you.
Thank you, Chairman. That's a
Thank you,
good
Madam Chair.
Thank you, and I apologize again for not seeing your hand earlier. And I just want to comment too that this is still a relatively new process, and we had the Commissioner of Health in front of us talking about the information that they're gathering to make sure that these dollars are going to be used effectively.
Right.
So, you know, one of the reasons that we have not allocated more dollars at this point is we're still kind of feeling our way, if you will, as to where and how those dollars should be implemented. So, again, Mr. Chair, as always, you've done a great
Thank
job,
you.
and we thank you for joining us here today.
Thank you very much, Chairman, okay, and Chairman and members.
With that, without objection, Members, we will meet tomorrow immediately following session to continue this process. So immediately following session, convene here. Thank you. We adjourn.